In fact, Jamie Dimon, just today, at the time of this recording, is talking about a US recession in 6 to 8 months. Sridhar Vembu or Zoho is saying if that happens, SaaS will be really, really badly hit off. And we know how SaaS was a winner since 2020. But Mr. Srinivasan, I want to come to another point. You've been candid enough to talk about the winter season, but is there any kind of a fight that is also on between the early stage guys and the later stage investors? Now, the early stage investors have probably seen a drop in their valuations. The late stage investors will want a further fall in valuations. In the middle of all of this, the founder and the startup is stuck looking for funding. What's going on?
I think you captured the point very succinctly, Nayantara. That is always an issue, right? Because in some sense, you're waiting for the apples to fall and gather them in your basket, and you're hoping they would fall in a manner that would suit you. I think the major change I see here is like in every single recession, is basically the survival of the fittest and the flight to quality. So in the early stage also, the seed stage will do very well now because there are going to be some great people are always coming out with great ideas. And that's what the seed stage bets on. And they're not worried about the next year. They're all worried about the next 5 years. So seed stage is actually seeing, in my mind, a fair amount of traction. Whereas the Series A, maybe the Series B is where you're going to find there are going to be a lot of concerns, right? So I think the growth investors would do well not to try to time the bottom. It's never good to time bottoms and wait for it. So it's better to keep on your mind only on one thing. Do you really have a great founder, a great set of founders in a space that is going to have a lot of growth? And just stay focused on that. Don't over worry. Don't try to do distress. Don't do the crossing the chasm strategy of finding out who's going to fall into the chasm. It's better to stay very, very focused in my mind on just great founders and great spaces. So I just think that once we get into this conflict, which you correctly pointed out, there is a moral hazard. You'll probably end up, who falls the most? Probably the companies that are most affected by gravity, And do you want to then take that bet? So it's better to just stay with your standard formula. Great founders, great spaces.
And when you look at your portfolio companies, would you say that there has been a drawback cut in valuations? The founders are getting more realistic, a renewed focus on the bottom line, path to profitability?
I would say two things, Nayantara. We have not seen any change in valuation. But what we are really seeing is the future rounds, because there are multiple investors in India, the dharma of investing now is 4 or 5 investors in every company, right? So every investor will have different behaviors. The next round getting probably postponed a bit. All of them are very well-funded companies, don't affect their business. So that I think you'd certainly see founders being cautious and saying, let me not look for a next round now. Let me just focus on building the business. And definitely cost control for those who are more overseas focused. On the other hand, Nayantara, just the reverse. Companies that are Indian focused are adding people, adding capability, because India, the market position in say in financial services or digital financial infrastructure is super positive. Everything is growing at crazy rates, and I suspect will continue to grow because it's driven by domestic consumption. So Indian focused businesses are very different. We only have one business that's overseas focused, and it's a very small business. So it's too early to call for us. But for people who have large SaaS companies focused largely on overseas markets, who can disagree with Sridhar Vembu?